if Nvidia can openly get away with financing their own customers' purchases while saying that demand is growing, while also showing inventories growing at the same time, which that's a heck of a trick, right? Demand's growing. We can't keep up with demand, but inventories are growing at the same time. Oh, okay.
Buy it, man. I'm not buying everything I'm seeing.
I'm not either, man. I think this feels just like classic late cycle, last person out, turn off the light. If it I'm not calling a top. I'm not saying that it's over, but it sure has that feel to it.
It does. It does. Well, let's go have some fun. You got your thing today, right? A little bit.
Yeah. Well,
Are you
remember
just
I was telling you.
are
I
you
was telling you I
gonna lead
thought we were
it?
gonna. What's that?
Are you gonna lead it?
Yeah, 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 yeah.
Okay, cool. So
And
we'll jump
like we were saying, we thought remember I was telling you I thought we were going to be down 5-7. Well, since we said that, we're down 6. So
there
we
you go.
got
That's
that.
perfect. That's
So
perfect. Well, let's rock this thing so that way you
all
can
right,
get to
let's
it.
do it.
3, 2, 1. That time of the week. Talk to our man, Zach Abraham, Chief Investment Officer, Bulwark Capital. We talk about, I don't know, the markets, the economy. First things first, the jobs. I saw the jobs today, and the first thing I thought of is, first of all, it's September, not October. Secondly, and this is most important, I'm not sure I believe those numbers.
Yeah, I don't really think you can believe any of the numbers, not for any potentially nefarious reasons, but because the data is so unreliable right now.
Yeah.
I'll tell you what, the ADP numbers sure don't mesh with the last numbers that we saw the Feds put out. It doesn't feel. Now, I will say this, 115,000 new jobs or whatever they said that we're at. That is not an impressive new number. But at the same time, unemployment ticked up too. Now that can happen. That based on the way it's calculated, it's really weird. But you can actually have a better than expected jobs number and have a jobs number come in stronger and still for weird idiosyncratic reasons still see unemployment tick higher. So that doesn't tell you a whole lot. But I think that what you saw in the markets today, it had virtually little, if nothing, to do with the jobs number. I think that what you're seeing in the markets today is you're looking at, in our opinion, and this is one of the reasons, and I was just telling you, I think it was last week, I told you that before this resolved, I expected the markets to drop at least 5 to 7% from where they were at. We're currently at about 6, so we're right in there. I do not have a crystal ball. As a matter of fact, whenever I make a prognostication like that, I assume it's going to be wrong. But I'll just tell you why I thought that and why that's played out. Whether you believe it's a bubble or not, I think something that every sober-minded investor can believe is that at the very least, you have a market that has an unbelievable amount of future expectations built into it, right?
Yeah.
And when that is the case, especially when you've got a market that's trading at extraordinarily and historically high valuations, never been higher when it's come to comps to other markets, right? So, and what I mean by that is, in order to keep playing that game, you can't just have things stay the way they are, right? Because we're admittedly frothy. We just sat there and said, hey, even sober-minded investors would sit back and say, look, at the very least, you have priced in outstanding future results, at the very least. Well, that's how bubbles happen, right? Like that's what happens. And it very much appears to be a bubble. And I was listening to people use Nvidia's results. Oh, Nvidia beat on earnings. That proves it's not a bubble. That is the dumbest analysis ever. That'd be like looking at Cisco back in the year 2000 to identify a bubble. The bubble wasn't defined by Cisco. The bubble was defined when Cisco's customers couldn't keep buying things from them because they weren't getting funded, right? So I don't care what Nvidia's quarter looks like.
Yeah.
It's the unsustainable level of CapEx spending that is creating their quarter, which I don't see how these companies can possibly keep it up. And the reason the reason they won't be able to keep it up is not because a lot of these things aren't going to be phenomenal. They will be. But when you're betting that big, you've got to get returns and revenues and profits that are commensurate to your investment. That ain't happening anytime soon.
No,
It's
no.
just not.
No, it's like
So
OpenAI. How do you? Yeah, we did 13 billion. Yeah, but you've got 1.4 trillion dollars that you've got. What's that? You just took a Dixie cup and tried to empty a pool with one scoop.
right. And that's and that to me is the entire issue here. It's not that I think that because of these investments, Amazon's going to go away. I don't think Nvidia is going away. I don't think any. What I do think though is guys, when you are putting up, when you're looking at a $3 to $4 trillion capex schedule, okay, keep that in mind. Profits on the S&P 500 last year were 1.8 trillion. Total profits. Okay, so when you think about a capex investment cycle of 3, 4, 5 trillion, next year alone, the hyperscalers are being projected to invest another 600 billion. Okay, next year alone. So, how in the hell are their earnings going to hold up? Like, look at Meta, for example. Okay, Meta just did the recent round they just did was 30 billion, right? A $30 billion funding. Okay, so let's say they put that out there at an average maturation or date of 40 years, say 40-year debt, paying, let's say 7%. Okay, 7% on 30 billion, it's $2.1 billion a year. What was, I think Meta's profit of all last year was what, 35 billion, 40 billion? Okay, so just this 1 year's debt offering, choose 8% off next year's earnings. And they're doing a bunch more. They said they're doing a bunch more. So is your argument going to be, while these companies' margins are being compressed, while their earnings are falling, and while we're waiting to see if the biggest bets in history pay off, you're going to make an argument to me that their stock is going to continue to go up in that environment? Hey, you might be right. I would love to take the other side of that bet.
Absolutely. Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. Wall Street, Main Street, two different things. But one of the things everybody looks at, obviously, is Walmart. Their earnings were a little bit better. But one of those things that shows people is it's just like McDonald's. It's who's shopping there now comparatively to where, maybe other people would shop at Costco more or Target more. It's same thing with, McDonald's. The whole thing about, you're finding out more middle income is out and higher income is in at McDonald's. That gives me another little pause for concern.
Yeah. So whenever you're looking for economic slowdowns, I understand why people would look at a Walmart and say, well, consumer's fine. Look at Walmart beat. Whenever you're looking at numbers for discount retailers, whether it's Walmart, whether it's Dollar Trees, anything like that, you always have to take those numbers with a grain of salt. And I think one of the great ways to compare those numbers, if I look at a Walmart's numbers coming in really strong and beating on expectations, while simultaneously I see Ford and McDonald's do it, okay, that's consumers doing well, right? Conversely, if I'm looking at an inflationary environment like the one that we're currently in, Walmart announces good announcements, but McDonald's is getting hammered and Ford is very concerned about the next 12 months revenue. That to me means something completely different. So what that means to me is switching, right? Meaning consumers that typically wouldn't shop at Walmart are now doing it to save money. So that is one of those signs where I look at it and go, if you're looking at Walmart now, flip around. If you tell me a Nordstrom's had a really good quarter in and of itself, right? It could be just idiosyncratic, but that would be more suggestive of a healthy consumer. You tell me Walmart did better than expected. That's a black box. That could just as easily be bad as it is good.
Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. We talk about the markets, but also the economy. Fourth quarter, we talk about it. It's Christmas time. It's really going to heat up next week. We got Black Friday. We got all the things going on. It's weird. I think people are going to go spend money, but I just feel like I don't feel the energy that I thought I would feel this time of year. It just feels like there's something hanging out over everybody. And I keep the word affordability. I think that's the word of the year right now.
Yeah. And it's something we've been thinking about for a long time, because the way that I thought that this thing would sort of evolve or devolve, depending on how you're looking at it, is I just kind of felt like that eventually the consumer would just sputter out.
Yeah.
Man, that feels like what's going on. And it's getting to a point where if it's not happening, I'm also not understanding that. I know what guys like you and I make, and I know what that looks like compared to the average, the average person in here. And I know how much I'm noticing these costs going up. And I'm blessed enough and lucky enough to where I'm in a position where it hasn't really negatively impacted me. But then I think about, like, your more middle of the road incomes, and I'm looking at those people going, I don't understand how that I don't get how they're hanging in there.
Yeah. I
I
don't.
mean,
No
I
idea.
I don't know if I told you this the other day, but we had our football party for my fifth graders, and one after another, they started asking me if they could spend the night, right? And so when one of them asked if they can spend the night, the answer is yes, and then I got to answer yes to all of them. So I ended up with 15 fifth graders spending the night at my house, right? We didn't get a lot of sleep that night, safe to say. But next morning my boys go, "Hey, Dad, can I order McDonald's for everybody?" Yeah, we'll do egg McMuffins, right? For the thing. Now we got like one breakfast sandwich per kid and some hash browns. It wasn't an elaborate. It was like $220
Yeah.
for McDonald's breakfast.
I know.
Now it was 15 kids. I get it. It's a lot, but
Still,
I mean,
15 kids,
hey,
$220 for what you would use. It's not even what it used to be. It feels like it used to be $1.99 a
yeah,
couple, a year or two ago.
yeah. It feels like an order that we'd be laughing about that was $70. Can you believe we just spent $70 at McDonald's? That's crazy. Well, I almost asked them if they had financing options. I was like, hey, can I do an eat now, pay later deal on this stuff or what? I can't stomach that all up front. Yeah.
So as we head into this fourth quarter, I'm still, I want to be positive. Again, I don't think we're headed for over the, but then I start thinking about, the tariff stuff is still all over the place, and that's not totally solved. And though he did pull back, and they basically said, look, dude, here, you want to know what's going on? We're not that nation anymore. Tariffs sounded great in the 80s. Well, this isn't the 80s. So, it's time for you to move forward, and we got to get out of these things. But we've got issues still with I look out there, the credit card debt is through the roof. You've got, soon to be the ACA's subsidies are going away. That's going to affect the first quarter. And he even got Scott Besson out there going, it's like, we're not probably going to see any kind of lowering of rates. And, you've got some housing prices. It just feels, it's like when you go play that game when you drop a quarter and all of those quarters are hanging on that thing and you're looking for, I'm just waiting for that one where it hits it and everything goes.
Yeah. Well, so, and here's the way we got to look at it. I think what you got to do is you got to be waiting for an event or news that is bad enough to get the government back on the stimulus side of things. Okay. Cause that's where this leads. We've got to change our thinking in terms of, you see a couple days like we've had here last week and a half, see the stuff going under the surface. You're like, is this kind of the foretelling of a recession? Is this kind of the, pre-warnings of a crash kind of thing? I think we got to look at it differently. I think we got to start looking at it as kind of the pre-warning or the precursor to another government intervention. Right. And so, because they have to. And so what I would tell people is, look, the game plan, I think right now is really simple. We can sit here and wonder, is the S&P going to get 10% more historically overvalued, or is it going to get undervalued? Or we can do what I think most intelligent investors are doing today, looking around the world going, hey, there's a lot of different things to invest in. And I'll tell you what, right now, the US, out of everything I'm looking at, looks by far to be the hardest market to try to navigate. Why don't we mess around over here where the prices are 1/6 as much, where we can get 7-8% dividend yields and clean balance sheets, and we don't have to worry about all this stuff. And oh, by the way, the one thing that looks kind of like it's actually a sustainable move right now is the dollar heading lower. So whereas a dollar higher biased portfolio was where you want to be for the last 10 years, I think it's the opposite now. And wouldn't you know, a weak dollar portfolio is about the cheapest thing out there right now. And so will you have days like today where it doesn't feel good, where gold is down 0.3% and gold miners get hit for 4.5 for no reason? Sure. Why? Because this market's dumb, right?
Yeah.
The same things that make people buy all the crazy stuff over here is the same reason they're panic selling gold mining companies, because gold's down 0.3% off the back of an Nvidia earnings announcement, right? Like what? So, and that's the other thing you got to keep in mind when you're looking at these ridiculous valuations on the one side of it, that there's ridiculous valuations on the low side out there, so pick your spots. But like I've said, I think that there's, if you're a fundamental disciplined investor, everybody's sitting around wringing their hands about the United States. I just sit there and go, stop. It's too hard. Like Chase, my head of research, he has the thing all the time where he's like, put it in the too hard category. Meaning, guys, you got all these markets out there that are trying to come out of earnings troughs that have low single-digit price to earnings ratios, and you're trying to figure out whether you're going to get another 5 to 10% multiple expansion in the most expensive stock market in U.S. history. It doesn't need to be this hard. Go buy other stuff. Go buy other stuff and wait for U.S. prices to make sense. They will at some point. They don't right now. So
there you go. That's true.
Don't buy them.
Zach Abraham, Chief Investment Officer, Bulwark Capital. People want to reach out to you, get that free review and chat with you. What do they do?
BulwarkCapitalManagement.com. Go to knowyourriskpodcast.com. Listen to the Daily Dots. Put out a 25-30-minute daily show summarizing everything important that went on in finance and economics that day. We're not hard to find, man. And just give us a Google and you'll find us, no problem.
Right on, brother. Good talking to you. We'll do it again next week.
Hey, you too, man. Fun as always. Thanks for having me.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.